This is Eric Muathe, Muathe.com. Now, quick video, August 12th, 2019. All right, now, market's been pulling back the last couple of weeks. No surprise, but you'll notice a lot of the stocks that you're tracking have not all of them, a lot of the stocks that had been doing well over the last couple of years have the same look and feel. Number one, what you're going to notice is a lot of them are failing to hold their previous breakout levels. For example, take a look at Burlington Stores, and it had a breakout level of 171.71, which is the highest monthly closing high, actually the highest monthly closing high right there. So the beginning part of 2019, that's the closing high. We had a breakout as of July 2019, which is now failing. So this was a breakout. So we can see that as long as the stock is trading below 171.71, this is turning into a failed breakout. We know that failed breakouts are notorious for taking instruments low. And also, let's not forget another important aspect that is going on here. Lest we forget, we've been rejected twice, not once, but twice, when trying to move above 69.1. What's the big deal with that? Well, there are going to be a couple of links in the description of the video that help explain why this method is important. It is my own researched method, so if you haven't heard of it before, well, now you are. So, rejection here, and seemingly, right now, we have a failed price breakout. Now, you combine those two things, and actually, you can add another layer where we see an improvement in prices with declining technicals. That is negative divergence. Now you take all these things, and this is a big picture monthly chart. It is suggesting that the equation here is shifting more to the downside. Now don't forget that the backdrop is after many years of having good returns, net, this stock is more than likely showing signs of exhaustion and a potential sign that as long as the price fails to hold 171.71, that this is giving the feel that the next major swing trade is for prices to see a sharp, huge reversal to the downside. And again, the key is 171.71. Just to keep it simple, anything above this, bullish. Anything below this, bearish. Eric Muathe, Eric Muathe, Muathe.com. Lots of the charts that you are looking at, especially for those stocks that have been winning over the last couple of years, have the same type of feel. Failed breakout, 69.1 rejection, negative divergence, breaking lows. That's not a good sign. As always, good luck, peace, and blessing. E-A-C-S. And so it is.